Welcome back. Now it's another day of fuel price hike. Petrol prices have been hiked by 21 paise. The retail price in Delhi is now 80.13 rupees per litre. For diesel, it is a 20th straight day of hike. Retail price in Delhi has been increased by 17 paise, 80.19 rupees per litre. Just to tell our viewers, in the last 20 days, petrol prices have been higher by almost 9 rupees per litre and diesel price by 10.5 rupees per litre. For petrol, we've seen the 19th day of gains in the last 20, while for diesel, it has been 20 straight days of gains. So not good news for fuel consumers. But let's move on to some important news coming in. Amid concerns of consignments from China getting abruptly detained at ports, logistics company DHL Express has decided to defer picking India-bound shipments from China, Hong Kong and Macau for 10 days. Alisha Sachdev joins in with the latest. Alisha.
Well, good morning, Mangalam. We first started getting reports of China and Hong Kong origin consignments being held up at ports in Chennai. Now, 5 days later, there are similar reports across all major sea and airports in India. This would include Delhi, Mumbai, Chennai, Kolkata and Ahmedabad as well. But the latest that we have on the story is that freight forwarding company DHL Express has said in a letter to its clients that it is going to temporarily suspend picking up India-bound import shipments from China, Hong Kong and Macau with immediate effect, that is from June 25 for a period of 10 days. It says, and I quote, that they are witnessing a severe lag in customs clearance for shipments originating from these three countries across all the ports in India over the last few days, and that it is seeing uncontrollable queuing, congestion and delays of shipments in their clearing ports across the country as well. Now, because of that, they say that they have taken this move to suspend picking up shipments from these three countries to ensure that the shipments they have originating from other countries do not suffer as a result of this congestion, and that they're also monitoring the situation at this point to see how soon these consignments can move from airports, seaports and container freight stations all over the country.
Alisha, thanks a lot for that. This is a situation that needs to be monitored closely, especially given the dependence of a lot of our electronics, chemicals, etc. companies that have on the raw materials coming in from China. But let's move on to earnings now. We have Ashok Leyland's fourth quarter numbers, where the net loss came in much higher than expected and the margins as well fell to about 4.8%. Sonia is still with us. Sonia, Ashok Leyland, the results, weak results were expected. The company reported weaker than that?
Yes, and you know what? This has been one of the worst quarters for Ashok Leyland in a very, very long time. The company reported a loss in Q4. A loss was higher than expected at 57 crores. The expectation was around 45 crores or so. This versus a profit of 653 crores that the company reported same time last year. The margins fell 630 basis points year on year at 4.8%. And across the board, you know, the numbers were on the weaker side. Revenues were down 56%. EBITDA was down 81%. And the management as well in their commentary was not very enthusiastic. They said it was a really challenging year for them. There are no signs of a demand recovery just yet, but what they are doing now is focusing on conserving resources and improving cash flow. So I expect the stock to be in the red today.
So thanks a lot for that. So that's about Ashok Leyland. With that, we move on to a stock which will be in focus on account of earnings today. Consumer giant ITC will be reporting numbers. Remember, over the last couple of days, we've seen a big move on ITC. So a lot is expected out of these numbers, especially on the dividend front. The stock ended 5% higher yesterday, crossed that 200 mark, trades at around 14 times FY22 earnings. The few things to watch out for this time around in the numbers. First one, of course, there will be a cigarette volume decline of around 4 to 5%. The second thing we'll be watching out for is the commentary on their FMCG performance. Remember, a lot of the food companies or packaged food companies like Britannia, etc., did see a lot of pantry stocking in the first quarter of this fiscal, which was April and May. So let's see whether ITC matches that or not. The third thing we'll be watching out for is the COVID impact on their hotel business. Remember, hotels across the board have suffered the worst impact on account of coronavirus. So for ITC, that will be an important imponderable. And finally, we will keep an eye out on dividend dividend, because during the quarter, the company went ahead and changed its dividend policy from 65% as a payout. They've increased that payout to 85% of the EPS. So the street expects around a 9 to 10 rupee odd dividend announcement coming in this time around as well. So put all those numbers together. What are you watching for? A close to 3% decline in the company's revenue. The number you're looking at is 11,633 odd crores. EBITDA declines by about 5%. The margins stay stable around that 37.5%, 38% odd mark. And the net profit shows a mild increase of 2.5%. The number you're looking at is 3,575 crores. All right, the other stock which will be in focus on their numbers or ahead of their numbers will be Coal India. Nigel is here to tell us what to expect. Nigel.
Well, morning, Mangalam. The numbers for Coal India on a year-on-year basis will look weakish. So on a sequential basis, we'll see some improvement in terms of the margins. Let's run you through the expectations first. We're expecting a degrowth on the top line to the tune of around 5.5%, but the operating profit will get hit harder. So out there, we're expecting a degrowth of close to around 11%. That would mean that margins will get compressed by roughly around 150 basis points odd. The net profit as well is likely to see a decline of close to around 10% approximately. What are the factors at play? Remember, for Coal India, we have the operational numbers for the past quarter. So the volumes, we have derived that. It comes to around 164 million tons odd. So that's absolutely flat on a year-on-year basis. It got hit because the second half of March, we didn't see any big power demand. So that's point number one. The second factor is that, FSA volumes have improved and availability of non-e-auction coal has improved. So that's why the e-auction volumes will take a sharp knock, which is not very, very good for profitability. Now, realizations are also likely to see a decline of close to around 5 to around 6% approximately. We are working with a number of around 1,540 rupees per ton. Why does the blended realizations get hit? FSC realizations will be more or less flattish. The problem is e-auction volumes. E-auction volumes will get hit, and e-auction realizations are likely to see a degrowth of close to around 16% odd. We're working with a number of around 2,300 rupees per ton, and that's what dents the profitability. So why do we see margin expansion of around 150 basis points odd? One being that volumes didn't see any growth. So there is no operating leverage that plays out. Second factor is that realizations will be lower. And the third factor, the most important factor, is that in fact e-auction volumes as well as realizations will be lower. The key issue that we'll be looking out for is what is the current inventory level with Coal India? And second factor is receivables on their books. What is it, particularly after Q4? Back to you.
Thanks a lot for that, Nigel. With that, we move on to the IT space. In fact, let's get you some important commentary coming in from Infosys co-founder N.R. Narayan Murthy, who says that instead of getting too worried about the short-term loss in growth, the focus should be on discipline, innovation, and excellence in execution to bring back growth. Listen in, and we'll be back after a short break.
And many other people are talking about deceleration by as much as 5% of our economy. But my own view is we don't have to get too much worried about this. The whole world is facing. The world is becoming more and more cost conscious. The world is becoming more and more competitive because of two factors. One, there is a certain anti-China feeling, right or wrong, I don't know. I'm not a politician. I am a pure ex-businessman. And next, Brexit. So therefore, because of these two phenomena, I do believe that there will be a lot of foreign companies, particularly companies from the UK and also from other parts of the world, which will try to explore the Indian market.
Welcome back. Let's take it straight to the commodities arena with Manisha Gupta, as always, this morning. Manisha, good morning.
Morning, and thank you for that. Well, the crude oil prices have rebounded yet again, 2% up in the overnight markets. But for the week, we still are headed for a decline for this one. The positives come in from the data which shows that there is increase in vehicle traffic in major world cities in China, in Europe, and in US as well. The flight frequencies also have increased. The employees phase back to work. So these are some positive numbers that have been coming in. The U.S. unemployment benefits also was lesser than what the estimate was, and that was a positive. The U.S. capital goods data also rebounded. So in the last 24 hours, we have seen some positive economic numbers come in, which have led to some more confidence come back into markets. Not just crude. If you look at the metal prices, we've seen them trade steady as well. The volumes, of course, are low as the Chinese markets are shut for a second straight day today. But the copper prices are supported from low supply in Chile, Peru. So the supplies have been lower, the inventories are declining, the demand is getting better, and so is the economic data, and that is supportive.
Manisha, thanks a lot for that. With that, we wrap up on this edition of Power Breakfast. You don't want to miss Bazaar Morning Call, which comes up next because it's the last day of the week, but the first day of the series.